All right, hi guys. I hope all of you are doing well. Welcome back to Your Nifty Guy and today's episode of Decoding Nifty with me. This is this daily series where we analyze and decode Nifty on multiple time frames, analyze what we did in the entire trading day today versus what we had planned yesterday, and then we make a clear, actionable plan for the next trading day. So we'll jump straight to the charts. But before we do that, in case if you like these daily breakdowns, make sure to hit the like button. Subscribe to the channel if you haven't already, as well as put down anything that you might have to say in the comments. Let's get started. Yesterday, what we had planned was a very simple plan of creating a long entry above this high and above this high. Anything could have been considered based on your style of trading with a pullback. Now, the markets opened flattish, went up above the trend line which we had drawn yesterday, but then did not give us a closing, right? So that was the reason why I decided not to enter into this particular trade at the break of day high. Now, around here, post this particular move which came in, this was a good enough pullback, and had we continued the up move from here, this would have been the good and very good again, decent trade, I believe. But then again, markets had different plans, and in word, if I have to summarize today's market, it was kind of complicated. Complicated in the sense markets were going up, but then the option prices were not moving in sync with the markets at all today. The reason was the fall in India VIX. Here you will be seeing the India VIX as 0.17% in green because that is where it closed with regards to yesterday's closing. But then again, if you would have looked in the during the market hours, the VIX was quite negative from where it had closed yesterday, right? Sorry again. Yeah. So the option prices were not moving in sync with the spot prices. But then again, we cannot do anything that is not in our control. So this was the closings that we got not only above the trend line but also above previous day's high. What looked like a previous day's high breakout failure quickly formed a base around here, and then this is where I had entered into calls once this high was taken out in this particular candle with the stop loss just be below this particular swing. Markets immediately came down, formed another swing, went up. This is where I shifted my swing from here till here to this swing. Now, if you look closely on the spot chart, the swing was not even broken, right? Even if we had placed our stop loss just below this, the swing was not even touched. But then on the options chart, on the spot chart, it was not breached. But on the option chart, the stop loss got triggered. So this is where I had taken the first stop loss for the day was here around a stop loss of 11 points. So I had entered here at this breakout. This was the stop loss. Markets moved sluggishly. This is the only word that I can use. And then this is where, even though on the spot chart, the stop loss was not triggered, markets went up. The stop loss could have been trailed to this swing low and then this swing low where it would have been triggered around somewhere around here. But then again, on the options chart, which is where we actually take the trades, the stop loss got triggered and I got out of the trade. Now, post this particular trade, I observed a interesting trend line which formed from below today's low, right? This is the trend line which had formed and considered with combined with the negative RSI divergence while price was forming new highs, RSI was forming new lows. I had planned a short trade at the break of this particular trend line. Now the break came in this candle. This was a good enough pullback, which is also an inside bar. I entered into puts around here. At this particular point, I had recovered the entire loss that I had taken in the long trade which I had taken in the morning, as well as was in some good profits. But then this candle, which as per my trailing system had a higher high compared to the previous candle, higher low compared to the previous candle, and also gave us a closing around here. This is where I exited my trade. I captured around 9 points in this particular trade overall, and the net day was in negative only. So these were the only two trades that I had taken today. But then again, I believe if you follow and respect your rules, this is how it will help you. Had this candle not given as a closing above this, I would have held it, treating this as a normal retracement. But then this candle fulfilled all the three conditions for me to exit a short trade and look at the next big candle which came in. Had I not exited the trade around here, I would have definitely exited my trade, because this would have also triggered the original stop loss, which was right above this particular swing. And then, although the future in the next minute itself, the candle formed a bearish engulfing, went sideways, went even below. This would have given decent profits, but then again, this is what it is. Not all days are the same, and that is what I'm saying. Today's day was complicated to say the least. So the Diwali break that I had taken off not trading during Diwali, because I was busy with my family business front. I believe Nifty has taken it to heart, and it's not giving me good and clean trading opportunities ever since I have resumed my trading. So, yes, in short, these were the two trades that I had taken today. And I hope the logic and everything is also quite clear. Around here, it was not just a trade based on the break of trend line, it was also simultaneously a change in structure. So till around here, if you observe, the price was making higher high, higher lows. Around here, the price first breached this low, then created a lower high. But then primarily the trade was focused majorly on the breakdown of this particular trend line, which was from which the market was taking in support throughout the day. Now, it was also combined with RSI. That was the reason of entering into the short trade. So yeah, that's it for the trades that we took today. I'll delete this. We don't need this for tomorrow. On a daily time frame, we have formed a good candle which has given us a closing above yesterday's doji. So yesterday was a big doji showing indecisiveness in the market. Today we opened higher, the low was higher, the high was higher. We got a closing also which is above the doji. So overall, the sentiments are bullish. Now, today at night around midnight, there is a US rate cut decision. So markets are anticipating that the Fed chairman will be reducing the rates. There will be a rate cut. So a lot will depend on how the event goes in. The tomorrow's market will be majorly determined by that. Also, if we look at the high that was made today, that is exactly the same as this particular high, which was made on the 25th, sorry, on 23rd of October, right? So this is the exact high which was made today. And so that for that reason, we'll keep the trading plan for tomorrow extremely simple. We'll mark today's high, long entry above this, short entry. I will still like to trade only below this, right? So for any trade on the short side, we got to go below this thing. Trades on the short side can get tricky. So a trade that we got today, so based on the trend line breakdowns and something which shows the change in structure, you can definitely take short scalping trades. But then for now, I will ask you to avoid. We are very, very close to the all-time high. There's a theory which is known as an ATH magnet theory, wherein once we are close to the all-time high, the all-time high will act as a magnet. Prices will try to touch these levels again, maybe breach them. So that is something that we need to keep an eye on if that happens. But nonetheless, we'll be trying to focus majorly on this particular trade in case if this happens, or maybe in case of any negative event or negative news happening overnight, and we form a base around here. This is also where we can look at creating a long trade. This will not just be a trade based on the fib levels, but then this will also be a liquidity sweep kind of a trade wherein prices go back below today's low, take some liquidity, and then move way back up. So these are the things that we need to keep an eye on in tomorrow's market. Mostly tomorrow's market will again be a volatile session. Uh, that is how it is going on since the last couple of days now. So let's see. So we'll keep the trading plan very, very simple. I'll try to keep my trading, I'll reduce the quantities basically. So this is what I mean by saying that I'll try to keep the trading low. So, yeah, that's it for today's analysis. And days like this remind us that trading isn't always about finding the perfect setup. Sometimes it's about staying patient, reading the market's intent, and avoiding unnecessary trades. If today felt confusing, that's okay. Not every day has to be profitable, but every day can be educational. If you found this breakdown useful, don't forget to like the video, subscribe to the channel, and drop a comment sharing how you handled today's market. This is your Nifty Guy signing off. See you in the next one with tomorrow's game plan. Until then, trade smart and stay disciplined. Cheers and thanks for tuning in.